Hello everyone, my name is Eugene and welcome to Finance Talk. Today we will speak about investors' checklist, why we need it and how it can help you in your future investment decisions. We will also look through the general checklist template and you will understand all aspects of it. In the end, you will also get a free template for yourself in order to customize and improve your investment process. Stay tuned. First of all, let's speak about what is actually the investment checklist. If you're a beginner or more advanced investor, you probably know this kind of situation where you heard about some new investment opportunity or the stock to buy, and you only have a couple of hours in order to make the decision. In most cases, beginner investors just buy the stock without any analysis at all, and then they only start to understand the risks about the company, the industry, the situation, which is not so good, and as a result they can lose their money. More advanced guys go to YouTube or other resources in order to understand the company better. They watch for CEO interviews, they look through financial statements, they go and read some news, etc. And then they also make the decision and hope for the best. But in most cases, those people who have some knowledge in the industry or in the investment world just do not have the system which helps them to make better investment decisions. Popular investors like Warren Buffett, Charlie Munger, Mohnish Pabrai, Lu, Guy Spear, and others also have some kind of written or mental checklist in which they evaluate the company. If you go to the internet, you wouldn't probably see the exact checklist of Warren Buffett, Charlie Munger, Mohnish Pabrai, and others. So in this video, I gathered all points I found in Warren Buffett annual letters, Berkshire Hathaway annual meetings, Mohnish Pabrai interviews, and Charlie Munger interviews. I have divided it into two parts. In first part, there are questions which you can ask yourself before making the investment. They consist of general information about the business, about the industry, financial position of the company, and management in total. Second part of this checklist are questions which you can ask yourself after making the investment. Business model questions, questions about financial position, management, and also the industry in general. Now let's look in the first part of the checklist. Here we have general questions about your investment. For example, is it in my circle of competence? Do I have any experience or knowledge in this particular industry? Have I worked previously in it? Am I an expert in it? Is this investment with low risk and high uncertainty on the market? There is a classical quote of Mohnish Pabrai, heads I win, tails I don't lose much, meaning that you understand everything which is going on in the company, you understand all the risks which can occur, and you minimize them. And in this case, by making the decision and making the investment, you save. So you have the upside. For example, the stock price can go up to 100 or 200%, and it is low probability that you will lose your money. Next, what I missed in my analysis. This type of question I usually ask myself in the end of my analysis when I read everything about the company, about the industry, about the competitors, and if I'm not pretty sure on 100% what is going on in the company, what is the current situation, why the management did this and that decision, I would probably go and analyze it one more time. Would I own the company till the end of my life? Here is a great example which Warren Buffett gave on one of Berkshire Hathaway annual meetings. Suppose you have 20 punch cards. Every punch card equals one investment decision. And if you invest in the company, you take out one punch card and you have 19 decisions to make. And in whole life, you can make only 20 investment decisions. Would you buy this particular company? And is it really worth putting your money? If you answer yes to this question, and you are ready to hold it till the end of your life, it is probably worth to continue digging. Next, is it a good business or not? This kind of question I ask myself also in the end of my analysis, because for me, I also need to make sure that this is the right decision to make. Then we have the information about the business itself. Does the business have the durable competitive advantage? Does it have the particular moat which protects the company from the competitors and from the industry disruption? Does this stock hold by top investors? Because as Mohnish Pabrai said, there can be 1,000 reasons why this or that investor sold his stock, and there can be only one reason he bought it. to make money. So if you see that top investors hold this particular stock, they probably would conduct better research than you. They understand something that you probably don't know, and they also agree that this is a good investment and the company will earn more money in the future. Then here is the interesting question. Is this business nuclear war protected? Is this business extremely safe and stable? And even if some unexpected situations occur like war or earthquake, will it continue to grow? And can the management of the company start from scratch, work as usual, and get the same results? It is very important. Why and how can this business fail? This is also an interesting question because we can go through different news from those people who would like to short this stock. And if their arguments are reasonable and you see some kind of risk in this particular situation or this particular company, it needs to be analyzed more. And maybe this can be a pass on this investment if the risk is really high. Does the company have recurring revenue? This is also very important in order for you to understand the business model and the competitive advantage. And if the company has a recurring revenue from customers who pay every time, it is much easier to predict the future of this particular company. And in general, the company spends less money on acquiring customers, on increasing their revenue and growing the business. How does the company grow? Does it create in-house projects, acquire competitors, acquire different businesses, or just increase main revenue source? If you read about different companies, you will probably know that, for example, Amazon create their in-house projects and invest money in new projects inside the company. And when the project shows some traction, they invest more money in it. Some projects might fail and some become successful, but in general, the company will be profitable. Companies like Google or Microsoft can acquire competitors. For example, from the history of Microsoft, they acquired some companies for their Microsoft Office project, Internet Explorer, etc. Maybe the company can acquire different businesses like Tencent does. They step in different industries like music, games, communication, etc. Or maybe the company is just like the Coca-Cola and the management increases the main source of revenue, which is Coke and other beverages. What I don't know in this business? This question is also very important because you recheck yourself and understand the weaknesses of your investment analysis. Is it discounted or growing pie? This analogy was taken from Mohnish Pabrai interviews. This means that as value investors, we need to focus on companies which will grow in the nearest future rather than buy companies at a discounted price. Can the business grow or scale all the time? This is the similar question and this kind of recheck of your investment analysis. Is the business getting better? If we see that the company is getting better, the management increasing its revenues, its margins, and increases the value the company brings to its customers, then there is no need to sell this stock if you already acquired it. Next, we have the information about the industry. Here we need to understand more about its competitors, about industry trends, and how well the company is working in comparison to its rivals. Here we ask ourselves, how tough is the competition? Have I analyzed all the competitors and their reports? And what are industry trends and can they affect the company's position? Can the customer easily switch from one product or service to another? For example, if you are an Android user and you would like to switch to iPhone, you need more time to install the apps, to understand the basics of iOS system, and to learn all the tricks. It all takes time, and these are all barriers which appear in front of the customer if he or she wants to switch from the particular product to another. Then we have the type of questions connected to financial position of the company. Does it have or will have the PE of 1 or 2? This means that we need to acquire companies which in the future will return our money in 1 or 2 years. Then we go through different indicators of financial stability of the company. For that, we usually analyze balance sheet, cash flow statement, and income statement. And we ask ourselves questions like, does this company has a lot of debt or not debt at all? Does the business need a lot of additional capital to grow? Does the company has a stable growth for the past years? And do I, as an investor, project that it will continue to grow over the time? Does the company has free cash flow and is it increasing? This is also one of the most important indicators of financial health of the company. And if you do not know how to calculate it and what it means, I have another video specifically recently about this topic, which you can watch on my channel. How much percentage of the company is owned by insiders? Do they recently buy or sell their positions? It is also an important indicator which shows do the company management, employees, and other inside people believe in the company and in its growth. Do I have more than 50% margin of safety on the sticker price? This is also one of the most important questions because we need to understand that we buy this particular asset at a discount and we are protected from the downside. And as a result, we won't lose our money. Why Mr. Market giving me this such of cheap or high price? This can be the result of the particular situation of the company, maybe the revenue declined or some metrics, maybe they have some kind of lawsuit with the customers, or maybe they just changed the policy or their strategy. There are many different reasons for that, and we need to understand what particularly is going on. Next, there are several indicators which I personally look on: debt to equity ratio, current ratio, and quick ratio, and they actually show how well the company managed their debt and do they have debt at all, how well the company can pay off all its obligations and short-term debt. Does the company increase the number of shares outstanding or does it buy back their shares? If the company has a strategy of buy back its own shares, you will probably get the increase in the price in the nearest future. And also, if the company issues more stocks for the particular periods, it is not a great indicator for the investors. Has net investors or owner earnings increased over the time? By this question, I mean that do I, as an owner of the business or as an investor, receive more money on my stock every year? And is this number increasing, and will this number increase in the nearest future? Then we have the part of questions connected to the management and how well they operate in the company. We have such questions as what is the motivation structure of the management? Is the annual letter written like the marketing document? Is the management really interested in the company and its growth? What is CEO strategy of the company? Is the CEO a talented fanatic? Is he or she really honest with his shareholders, employers, and outside people? Does the management allocate capital well with high return? If the company has a great competitive advantage and it has a lot of cash, the CEO has to allocate somewhere this cash, not only pay dividends to a company's shareholders. Then we have the second part of the checklist. These are questions after making the investment. Some of these questions are similar to the first part of our checklist. So the main goal of this particular part and this type of questions is to make sure that we made our decision right, the management does the work right, the business is getting better. So as a business model questions, we have questions about the competitive mode and the business in general. Speaking about financial position, we also analyze quarterly and annual reports for that. We answer ourselves, is the financial position of the business increasing? Has any of the ratios changed in a better way for the last years? What is the company value today compared to the previous time? And does the market overvaluate the business or undervaluate the business? How much percentage of the company is still owned by the insiders? And do they sell or buy more shares due to current company events? And do they still believe in a company? We also have questions about the management. Has the management fulfilled expectations? After a certain period of time, they announced their strategy. And is the business is getting better in general? You can also add some additional points to this checklist. This is the list which I use when I make my investment decisions. So that's all for today, guys. I hope you enjoyed this video. If you have any questions or additional points to the checklist I showed before, please write them down in the comments below. It will help the community and together we can make better investment checklist. And as always, please leave a like and subscribe to this channel for more great videos. Bye.